Good afternoon, traders and investors. It's Will back with another one today. Happy Monday to everybody. Another trading week starting off with some good earnings today. And this week, guys, is going to be the week that makes or breaks tech. We have so many big earnings this week, not only on tech, but on the market as a whole. And this week, I am trading in a particular fashion that I'll show you guys towards the end of the video. But not going as heavy tech as I once was, because these are the types of weeks that you can get trapped fairly easily if you get too greedy on those premiums. So take a look at our earnings previews here today, guys. So for tomorrow, today we had a couple good ones, Domino's and whatnot, Whirlpool and stuff like that. But really tomorrow, Wednesday and Thursday are going to be the big ones, guys, right? So Microsoft and Google tomorrow. We also have a little Snapchat kicker here. Could give us an indication here of how Facebook might perform. But look, Visa, we have MasterCard, right, on Thursday as well. On Wednesday, massive day as well, right, with Meta reporting after the close here. Coca-Cola before the open. That's going to give us a really good indication on our consumer segments and trends. We also have a few hotel chains that I'm going to be very curious to see what their opinion is on current travel. And Thursday, of course, we do have McDonald's, Royal Caribbean Group, once again, one of our travel names, Intel after the close, Enphase, which is also one of my favorite picks. So I'm kind of waiting on these earnings on Thursday to even decide to do any more positions on Enphase. So not going to touch that week. And one of my favorite healthcare stocks, guys, down below here. I don't think you can. AbbVie, right? Been talking about that a few times over the past few days. Let's take a look at the heat map for SPY. SPY ending up with about 0.5% green on the day. Fairly muted day, but I don't expect much movement before we get the major earnings, guys. This is key. On the heat map today, you can see it was an overall green market, but with some mixed in red segments. So tech didn't do too poorly with most of our names here green, only Meta and Amazon trailing a slight bit. Healthcare also with a fairly neutral day. Our outperformer on the day, however, was financials. Very, very good day for financials. They've been running well. Now you can see on the one-day relative here, most of our major sectors here led by energy, even though it's a tiny, tiny segment here in real estate. Most of our sectors were green with healthcare trailing in the past, trailing the pack here, but that's perfectly normal. Healthcare has put in some beautiful moves over the past week, so normal for them to take a little bit of cool down. Now, let's get into the charts and see what can we expect for the week, guys. Well, at this point, as you may well know, guys, we are still looking for our higher low, right? Very, very obvious chart, easy chart, guys. 438 still. Anything above 438 is still just a higher low. What is this segment right here? It is a daily bear flag, right? So really ranging towards the top here. This is going to make or break with earnings this week. I can absolutely guarantee it, right? But bulls have a ton of space to work with, guys, to set this higher low. Even if we do get a dip off of earnings, guys, won't be a daily downtrend. Our low is all the way down here. So bulls with tons of space if they do proceed to grind lower here. And obviously our resistance points, guys, are going to stay fairly the same, right? 455 to 460. These guys up here on the weekly are going to be the ones to look out for. QQQ, bulls playing great defense, if I do say so myself. This is the Tesla and Netflix disaster day on last Thursday, right? So with that amount of drop and the amount of momentum, guys, 2.3% on a red day, you would expect some follow through. The bears have not been able to follow through, and this is a common theme this year. Whenever we get close to this 12 EMA here, very tough. Even when you get big days, right, leading and pushing into it, they kind of fizzle out, and the bulls just buy the dip and shut them out. So is this going to be another occasion where bears are just not able to follow through off of solid momentum? Well, tech earnings are going to be the one to make or break this pattern as well. If we get negative tech earnings, guys, this is most likely going to come down and test our 364-ish higher low area. So just keep an eye, guys. This is the line in the sand area, okay? If tech earnings are bad and we smash through here, it opens the door for your lower high and then daily downtrend. If that does happen by the end of the week, perhaps, well, we will be looking at weekly consolidation. It's a good thing, though, that bulls have tons of space to set a weekly higher low, right? So tons of space to work with. Bulls control the higher time frames here. But in the short term, guys, it's all about earnings. I'll repeat this. This is why I'm not playing big tech this week. I want to wait on the sidelines, see what happens. And if good opportunities get presented on to me, I will be going for it. I'm not chasing premium leading into this week. That's very, very dangerous. I tried my hand at it, and even someone like me with tons of experience tried my hand at it with Tesla last week and got burned. So I had to cover the loss so the loss wouldn't extend, and I'm covered on that loss through the end of this week as well, because I just don't trust it, right? Even if Tesla had a nice rebound today, I'm not taking off the cover. I'm not taking off the covered calls at all. I have really consolidated the loss to a net amount that I'm fine to live with until these things play out. So please, once again, play earnings at your own risk, not financial advice. But like I said, even someone as bullish as on Tesla as me, I knew that if Tesla got hit that hard off of decent earnings, right, it's very possible that something similar happens in tech, and that also could drag Tesla down. So I just don't want to take the risk. You have to limit the risk, guys, if you want to see consistent gains over time. So keep an eye on this area. Obviously, if we do set the higher low here and big tech earnings are amazing, well, then we're going higher, guys, and higher just means that we're going to the all-time high resistance areas, guys. Anywhere between 390 and 400 psychological is going to be the next little area here. XLF financials, another beautiful day on financials, targeting this 36 to 37 level right here, right? So clear weekly uptrend. As soon as this weekly uptrend tops out, most likely in this resistance area, we're going to just be looking for a higher low. And on this higher low, I will be pouncing as close as I can get to the $34 level to increase potential exposure to US financials or in the ETF as a whole. On the daily, very, very simple, guys. Series of higher highs every single day. Really, really, really taking these stairs up on this one. So you love to see it. The move is definitely not finished, guys. Absolutely not finished yet. Bulls are strong. Clear daily uptrend. And at this point, any pullback above 34.20 is just going to be for a daily higher low in search of potentially peaking in this little resistance area. Keep an eye on your RSI. RSI is getting there, right? So it's like getting close to potentially being top of the move. Financials, guys, is not tech. So you can see that if I pull back this chart, you can see when we get overbought on financials, it doesn't last as long as some tech names do. So just keep an eye on that, okay? XLV Healthcare. Healthcare with a bit of a pullback, but it doesn't really matter, guys. After this amount of breakout, right, 4.5% from the bottom, they are pretty much due to eventually start setting the daily higher low for continuation. So nice daily push up. We're going to look for the daily higher low and then confirm the daily uptrend, right? Working with a very, very decent amount of previous resistance, which should now act as support. This whole area right here, right, could come down all the way into this area, set the higher low and move higher. That is at least what I'm expecting. Why? I will remind you guys that we had a clean break of our tightening range on healthcare. It was a while in the making. I've been calling this for a while. I did have a bullish lean, and it's nice to see some follow through. The most similar chart, I'll bring this up again. Some of you guys may be tired of me bringing the comparison. Costco, look what it does, right? Bullish lean into a tightening range, right? Always breaks, and when it breaks hard and tends to not look back for quite some time, right? So I'm kind of expecting the same on XLV. We're getting really, really nice pattern break here, right? So we're pretty much going to be looking for that retest potentially in the 133 area as we pull back here. Once this move tops out, obviously the rest of the week it could go like this, right? And then pull back. But just to say, bulls are in full control. They've created so much space, guys. Pretty much anything above 130 is just going to be a daily higher low for bullish continuation to the upside. And that is pretty much it for healthcare. We're currently, only 4.5% from all-time highs. Very, very healthy chart. And you love to see consolidation at the high of a big, big, big push like this, right? Absolutely love to see it. Healthcare has been muted, and it's about time that they do some of the heavy lifting. IWM Russell, you can see rejecting in our little resistance area here, guys, 195 all the way up to 200 psychological resistance level. So we are kind of rejecting here. What are bulls looking to do? We're looking to set the lower high. Anything above 190 is just going to be your daily lower high for potential continuation to the upside. If for some reason we lose the daily uptrend and set a daily downtrend, no problem at all. Tons of space. Anything above 180 is just going to be your weekly lower high for potential accumulation and then another stab at this resistance area. But all that to say, bulls are in absolute complete control. Growth stocks looking very healthy. My sweet spot, Obviously, if we start pulling back for some weekly consolidation, let's say tech doesn't go so well. If we pull back into this area, I'm going to be looking for the lower 180 pocket here, 184 and below, for writing some puts so that I can potentially collect some premium. Dow Jones, monster, right? Had it coming, guys. Inverse head and shoulders, very high probability pattern. The head and shoulders, 87% overall, if I'm not mistaken, of pattern completion. When it's on a longer time frame, the probabilities are even stronger. And when it does break, it's very tough to just reverse it. So at this point, what are we looking for, guys, on Dow Jones names? We are just looking to eventually set a daily high or low. This little area here, right? We have the 12 EMA. We also have previous resistance, which is now support down here at 34,500, right? So if we don't pull back, this is pretty much going to be the first area that I will be targeting. I will be very happy when it does pull back there. There's a couple names that I'm still eyeing, right? Individual names, not going to be really writing on the Dow Jones itself. I'd rather pick and choose the names that I'm going to do on it. But that's what we're looking for, guys. Just looking for a daily high or low. Keep an eye on this little pocket right here between the 12 EMA and our horizontal support line. Very, very, very bullish. This is a weekly confirmed uptrend breakout as well, right? First weekly uptrend, right? Since pretty much this guy right here before we started hesitating, right? So beautiful pattern completion here on the weekly uptrend. Bulls are in full control. And I do expect, guys, that if technology takes, look at this monthly is nasty, right? Monthly massive push, 7 months of bull flag, and now we're pushing. In my opinion, Dow Jones definitely going to at least see the all-time high area this year for sure. In my opinion, at this point, value has been quite muted. And if technology decides to take a break, definitely going to see some rotation in the value names here. All right, so keep your eye out for that. I'll be bringing you guys plays. Estee Lauder, Nike, a couple more. I'll be calling them as I see them, but for now, value names are looking very healthy, right? Even American Express, after their earnings, came down a little bit, but still the decent little play here, guys, even on American Express, right? Weekly bull flag, just looking for further continuation of the upside. Very, very simple chart patterns. And American Express, one of my favorite credit card issuers because they cater to a higher tier client, which means they do fairly well in recessions. What am I looking for here? Bitcoin. Bitcoin, guys, break of our support zone, 30 to 29,500 was a very good area of support. The bears now have unfortunately broken that, so we are in a confirmed daily downtrend. At this point, remains to be seen how much of this we follow through for. On the higher time frames, though, this is still pretty much, guys, still pretty much a weekly bull flag, right? I mean, it's still looking fairly healthy for the bulls. If we put the fib up right, the bears have barely taken back with the close, 38.2. So still very healthy, guys. We still have tons of space. If they do want to pull back a bit more, you can arguably just let them. But we're toying with the 12 EMA on the weekly at this point. Acted as good support today. Remains to be seen if they'll hold that. But we still have a decent amount of space, guys. Like I said, Bitcoin moves up for 1 week and then sideways for the end of time. Up a few weeks and then sideways until the end of time, right? So it should be no surprise, guys, that since the interest in crypto is fairly low right now, right, with all the regulation and everything, shouldn't be much of a surprise that crypto is struggling to hold on to the gains or at least put in some consistent back-to-back weekly uptrends, right? But target to the downside here, I wouldn't really want to see it fall below around 28,000, this little pocket right here. Target to the upside remains put at your resistance, right? But crypto doing a whole lot of nothing, unfortunately. Now, Apple, very big. Apple does not have earnings this week. It is next Thursday, okay? So Apple will report last along with Amazon next week. What are we looking for on Apple? Anything above 187-ish is just going to be your daily high or low. Bulls playing great defense of the 12 EMA, but Apple will not be immune to the rest of the moves in tech. If the rest of tech goes red this week, expect Apple to come down as well. Keep an eye on your 12 EMA. If they break that, your target, you really need to hold this 187 because if we break it and come all the way down here, opens the door to either daily downtrend or at best case scenario, a tightening range if Apple can recover into its own earnings right here, right? So keep an eye on that, guys. Bull still in good control here, still looking for the continuation of your daily uptrend. Just keep an eye on these levels, crucial levels here. If we do lose them, guys, just a weekly pullback is in order here. You see my sweet spot, 175 to 180. So if we do lose the weekly upswing, right? Because to lose the weekly uptrend, you know, it's pretty much all the way down here at this point, right, guys? I mean, crazy, crazy, crazy stuff, how much space we have on Apple. That's why if we do lose it, looking to pick up some Apple down there in this 175 to 170 pocket. AMD bulls playing good defense of this 12 EMA. Look at this, guys. 5 weeks at this point, moving on to the 6th of holding and refusing to close the weekly below the 12 EMA on the weekly. On the daily, we are below, but this weekly chart is very, very, very crucial. Why? Because if we start losing this area, guys, it would be a confirmed weekly downtrend. Now, it may be a confirmed weekly downtrend with very little follow through before we potentially reverse it, but still has to be notable to you. I do have an AMD position on in the 104 area. If AMD is not able to hold on to this low area here, guys, expect them to come down into my green pocket, my sweet spot, my buy zone. Can it fall through there and completely collapse and go further if semiconductors pretty much fall through the floor? Sure. But this is a first area that I'm very, very tempted to add to my AMD position. Obviously, guys, if it drops lower, you know what we're going to do. We're going to DCA the positions. But this is pretty much my load up zone where I feel safe in terms of risk reward, in terms of AMD, because AMD, you know, they are still currently 35% off all-time highs, so trailing not only the semiconductor industry, but QQQ as a whole. And I love finding these laggard plays from beautiful companies, solid companies that have just unfortunately lagged the rest of the market. So if you're a bull right here, how you turn this around, you need to see them regain the daily uptrend. At this point, unfortunately, no daily uptrend for the bulls. The bulls kind of lost that as we lost these lows right here in the past few days. So pattern needs to restart as a whole. It could flush, but eventually you'll need to see daily higher highs and higher lows to reset the daily uptrend. Weekly, good move by the bears. I'll give that to them. Can't lie. Very, very decent move. But all I'm saying on AMD, if it comes down here, I'm definitely interested to buy. But if you're looking for the bullish reversal, like I said, guys, got to keep things simple. Look for the daily uptrend, and then you will have your weekly low being set. Okay. Amazon pulling back a little today, almost down 1%, right? They do have earnings next week along with Apple, right? So they're also going to be affected by this week's earnings from the rest of tech, but also next week. So keep that in mind when they're last to play. You know, if big tech has bad earnings and then Amazon has bad earnings, the next 2 weeks for this company is going to be very, very rough, right? So my pocket for Amazon all the way down here, 118 all the way to 114. This is my little sweet zone. Why? It's just the level that I think if we do get a weekly pullback, we may pull back into. There's some very good confluence down here. Would not mind picking up some Amazon in this area. But for now, what are we looking for here, guys? Pretty much looking to set the daily higher lows. Anything above 126 is going to be that, but the bears have put in some good work, guys. Very good work by the bears, reversing this movement right here, right? So very, very solid move by the bears. Have to give it to them when they do it right. We're now below our EMAs on the daily. Don't like to see that. So the worst case scenario ends up in a daily downtrend. The best case scenario for the bulls right now is reversing it and holding a tightening range until earnings. And then it's either going to break one of two ways, right? So best case scenario, holding the tightening range before earnings. Worst case is really setting the daily downtrend. But keep an eye on this, guys. If we lose this before earnings, right, it could be very nasty to set the daily downtrend. But at that point, I will be ready with some capital to pick up Amazon. The bulls control the higher time frames. So any pullback on a longer time frame is for me to buy personally. If you guys like it too, you can do what you want. All right, so keep that in mind for Amazon. Google. All right, Google also very, very, very confusing chart up here, right? So let me break it down for you guys. Daily downtrend was confirmed. Then we got an engulfing move off the last down move right here, got an engulfing move by the bulls. So this was an attempt to set up a daily trend change to the bulls. However, the problem, the bears have now cut very deep into this move, right? So when I see such a deep cut into a bullish upswing, right? normally what happens is your end scenario becomes a tightening range. It's fitting because it's right within the support area. These two yellow lines, previous resistance, has acted as support this entire time, right? I think that really we stay trapped here, especially considering we have earnings tomorrow. Tomorrow during the day may just be muted, also trapped within this area. And then we're going to get a break in either direction, right? The break to the upside would confirm the daily uptrend if we break our most recent highs here. And to the other direction, guys, if tomorrow we end up flushing this area, it opens the door for a lower high and daily downtrend confirmation, right? If we do end up with a daily downtrend, you guys know where I am. 110 to 104 is going to be where I'm looking to pull up to Google. Why? Because I just think this is a very good area where we could get, if we do get some move like that, right? Very good area, guys. Look at this support zone down here. It was support in the past. I expect this area to act as support as well. And I'm very comfortable the risk reward. If Google would pull back into that area, we would be down roughly, anywhere between 27 and 31% off the all-time highs. Very good area, but as of now, on the weekly, bulls playing great defense with that 12 EMA. It's all make or break for Google tomorrow with the earnings, in my opinion. And if we somehow end up flat, guys, it's even better, right? Because then we'll just be pretty much at the mercy of the market. The scenario remains the same, still remaining to be seen if the bulls can break out like that. Most likely scenario for me, however, is the tightening range, especially through tech earnings. And if we end up with something like this, daily downtrend, just look higher on the weekly, guys. We're pretty much going to be targeting this lower area below 110 right here, okay? Meta had also a fairly bad day. And the thing that I want you to notice on Meta, guys, do you see something that's happened recently that hasn't happened since last earnings, right? Loss of the 12 EMA in a considerable fashion, right? So now the bears have come down so deep that they open the door, especially tomorrow. Tomorrow, if we get an update like this and then flush for earnings on Wednesdays, guys, that is going to be a daily downtrend. We have not had a daily downtrend on Meta since the lows, right? It's only been daily uptrends. The bears have never been able to set a daily downtrend in motion. This would be the first, but would it be warranted? Perhaps, right? This weekly is fairly extended at this point. We've been overbought for a long time. So even if Meta does consolidate, shouldn't be too much surprise for anybody, right? So Meta, my sweet spot may be a bit low for you guys, but this is just where I personally feel comfortable in picking up Meta. $230 to $200 is where I would personally be buying more shares of Meta. Actually writing puts because I don't really buy shares unless they're for the long term. But in terms of writing puts here and acquiring shares for the long term, we would definitely be buying down here, right? But first things first, need to see what happens with earnings on Wednesday, right? Either a likely scenario could be something like this if we want to set the daily downtrend. However, what could also happen is if there's bullish earnings, they could just literally engulf this entire move. I've seen it happen before. You also have seen it happen before. Where has it happened before? Right here. The bears never set the daily downtrend. They just engulfed after earnings. So that is a distinct possibility where if earnings is good, we just gap up pretty much right through our resistance of 320 and start eyeing 325, 330, right? So I'm not touching this before earnings. I would be lying if I could tell you which way it's going to break, but those are the scenarios. We are most likely either going to set a daily downtrend for the first time in 6-7 months, or we're pretty much going to engulf this and the bullish trend continues. If we pull back, guys, I want you to know that anything above 231 is your weekly higher low. Tons and tons of space on Meta. The bulls control the higher time frames. So if we do get a drop off of earnings, I personally am going to be looking to buy the dips, especially if we get a hard break right here. I'm going to be looking anything 250 and under on the premiums. Microsoft, same concept, right? Earnings on Tuesday, tomorrow after the close. So what are we looking for on Microsoft? The bulls are looking to reverse this potential daily downtrend. What happened here? What happened here, right? We were trying to set the daily higher low above 327, right? So trying to set it at this point, but it's all up to earnings tomorrow. One of two things are going to happen. We're either going to come down here or even flush, set up for the daily downtrend, which then you have to once again look out to the weekly. And on the weekly, 323, guys. 323 is the area to watch. If we pull back into this 323 zone with earnings, because they have bad earnings, I'm going to be looking 310 all the way down to 290 for my premium, right? I'm waiting for it. I would love for it to happen, but at the same time, flip of the coin, right? At the same time, this could literally just be our daily high or low, and earnings could take this right through the roof again, right? So really looking for one of those two setups on a lot of names, especially for the most recent downside, right? The bulls do not have that much space to work with anymore, okay? We've come down a lot since the tops. If we get drops from earnings, guys, it'll be looking like they want to potentially set up the daily downtrend. At that point, we'll be looking to the weekly. These charts have not had daily downtrends in some time. Look, this was the first time they tried it, and we got no follow through. The bulls played perfect defense, right? We haven't had a confirmed daily downtrend really pretty much in 5 months, right, on Microsoft. So it could definitely be warranted. However, nobody knows. That's why you have to just watch for it to happen. In my opinion, that's why I play it. I wait for it to happen. I either wait for the confirmation of the daily downtrend and look down here, or if we break higher, unfortunately, I can't touch the stock, but that is what's going to happen on Microsoft. Now, actually, sorry, NVIDIA before Tesla. NVIDIA, same principle, except we don't have earnings, but NVIDIA will definitely be trailing based off of earnings. Gotta be careful here, guys, pretty much, right? Anything above 415 is going to be your daily high or low. So the bulls are trying to set the high or low right now, playing good defense around this 12 EMA, but same thing, right? The best case scenario is that this is the high or low, earnings go well, we start moving up to the top. If earnings don't go well and tech gets dragged down, the closer we get to 415, open the door for the best case scenario, tightening range at the top. Worst case scenario, daily downtrend. Have not had a daily downtrend on NVIDIA in a long time. This was pretty much a daily downtrend here, but no follow through, right? Before we move back up. So in true daily downtrend, guys, you would have to look pretty much back to December. So a very long time. So notable, these patterns have to be notable to you. That's why this week is huge in my opinion, okay? So keep an eye on this level. If we do somehow lose this level, set up the daily downtrend and break, well, on the weekly, you have to be looking out. We're gonna be looking for 400 confluence with the 12 EMA. But one day at a time, guys, we'll take this one day at a time. Tesla, amazing move up, guys, can't lie. I was kind of getting a bit, well, not worried, but I was kind of having a theory that, you know, Tesla most likely, now that we've come down so much, we are very likely in a scenario to where we can set a lower high and end up with a daily downtrend if earnings aren't good for big tech. So keep an eye on that. When we get an engulfing move like this to the downside where we cut our previous low in one clean sweep, we call that an engulfing move. The bears have engulfed, this entire move in one clean shot. Usually that sets up for a lower high compared to this previous high and a rollover. If we do get that rollover, guys, I will be looking to the 240 area, right? 240 and below for some more options. But what happened to me is I definitely got trapped, right? I wrote the 270s. We smashed through that after earnings, smashed through it again on Friday. And today we even opened up lower, but bulls were able to put in a good recovery. On Thursday, I pretty much said enough is enough. I stopped myself when we were getting down here, or on Friday, I stopped myself when we broke 260, right? And I knew that tech earnings were coming out this week. I basically said, stop. I wrote 240 in the money calls for just about $19. So I'm locked in at 259. So the difference between, I got about $6 in premium for 270. So all that math together, my break even is around 264. Okay. But I have covered calls that give me a price point here of about 259. So I'm at a loss of $5 per share that I've locked in. I've locked in $5 a share on 200 shares right here, right? So that's about $1,000 loss that I've locked in and said, you know what? I'm locking in this loss for right now. Talk to me after earnings, because I just don't want to be in a position where I'm holding this with a bullish lean and then we roll over with earnings this week and next week. Really would not like to have that. So that's why I'm protecting myself and looking for this thing to bottom out, right? So our first bottom point, we're hitting the lower RSI on these levels on the shorter time frames. You can see it here, right? On the 4 hour last week and on the 1 hour last week as well. We were really, really extended to the downside. So what I'm looking for on Tesla is pretty much this bottoming pattern to complete. You can see the weekly, anything above 240 is just going to be your weekly higher low. So bulls have done a great job playing defense today, but I don't want to comment too much until these earnings play out. What are we looking for here, guys? The best case scenario for the bulls is going to be a nice push and looking to set a higher low, hold these lows right here and reverse. okay? What the bears want to do is they want to flush this. So I'm keeping an eye out for whether or not we can get a bounce going or whether or not we flush right away. That is what I'm personally going for. But for me personally, I don't have enough information just with this. So keep an eye out on that for Tesla, either something like this, or we get a confirmed daily downtrend into more weekly consolidation. It's all up to big tech, okay? So look in the account today, right? With our withdrawal that I told you guys about, don't say, Will, why did the account drop? I told you guys, right, on Wednesday what we were doing. We were going to make a withdrawal. And then also we did take a slight little, well, we're in a losing position on Tesla, right? So the account did drop, but I did make a withdrawal. And we also did confirm, well, not confirm, we haven't realized it yet, right? But we've solidified a slight loss on Tesla here. So normal that the account drops a little bit, but still some decent performance here, 60% on the year. You can see SPY is only up about 18 something percent on the year. So very, very good outperformance from myself. Got to pat myself on the back for that as well. And, you know, when we compare the NASDAQ, same chart, NASDAQ is up about 34, 35% here, and we're up about 60. So not quite a double on the NASDAQ. We were previously at a double before the NASDAQ started running hard here, but, you know, very, very good performance. Can't complain at all. Now, on the positions, this is what I wanted you guys to see, right? So all this garbage that says zero right here, well, with all these extra letters and numbers, well, this is very easy, right? This is just PayPal, 23rd of July, 2023, July 21, right? So very, very simple. Was last Friday. When you see zero here, it just means that they expired or that they got called away. So you can see Nike and PayPal, I did not roll as I said I would. Got assigned some TPR. So we are in TPR at the 42 strike, right? I'll remind you where that is. So TPR at the 42 strike, this yellow line right here. You can see today we're actually above it now. So I got assigned on last Friday, TPR at 42, one contract, tiny. It was basically just like a throwaway, just replacing some premium. So you can see, guys, that we wrote some covered calls today. How much we get for them? 40 cents, almost 1%. That's my rule, right? 0.5% to 1%, very good. So TPR, covered calls, we'll see if we get called away on those. Not too big of a deal. SIG, right? You'll notice that all the plays that I took, this is the Tesla position that I'm in, right? The covered calls with the 240s, right? So you can see I got about 19 bucks for them. Underwater here, but we're obviously positive on the Tesla shares down there. So they kind of balance each other out, right? So that being said, I just want you guys to see here that most of the positions, aside from Roblox and AMD that I wrote last Friday, Roblox is a tiny position, by the way. The ones that I wrote today are value names, not tech, okay? SIG, right? Signet Jewelers, 70 puts. Where did I write them, right? We're currently at 73. The 70 put is right down here. Let me put a beautiful little yellow line right here so you can see it, right? It's pretty much at a nice previous level of support. You can see all the times that this general zone has acted as support. And now that we're back above it, I did not mind taking a position. Why? SIG is still considerably off its all-time highs. Decent chart overall, decent recovery since the pandemic, right? And we're kind of trapped within this range here. So I'm expecting price to either maintain between, you know, 60 bucks and 80 bucks, right? So we're kind of right in the middle of this range here. Don't mind taking that position at all, especially with this nice weekly upswing we got here. If we got assigned, I'm definitely not going to cry, guys. It's going to be a decent position for me. I'm pretty sure I'll be able to write covered calls and get out of the position fairly easily. So you can see I got 35 cents on that. That is 0.5%, right? 0.5% rule that I always go by very, very carefully. Estee Lauder. Big gap down open this morning. They were negative about 3%, guys. Estee Lauder is back to COVID prices. Look at this chart on the monthly. This is not a company that you kind of want to fade, right? They are extremely good at what they do. Very decent margins, increasing annual revenue over the past 5 years. That's what I want to say. They've just been basically on an extended downtrend at this point. I do not mind buying something that is in a 3-year time machine. I've been trying to build a position here. Only been writing short-term contracts pretty much. But what did I do today? Something different. I wrote the August 18s because they're not weeklies. So I wrote all the way out to August 18, which is about 3-something weeks away, and got $5.30. I want to do some quick math, guys, right? So $530 divided by 17,000 exposure, right? So 170 times 100 shares. That is about 3.1%. All right, 3 weeks, just over 1% a week. So I was very happy with this position. You can see I got $5.30, and we we're already in the money by, sorry, not in the money. We're already in profit by about $1 here. So decent gains on the day here, as I did write it when it was in the lower 175. So we was able to recover nicely during the day, but very interested in Estee Lauder as a whole. I've been bringing up this name a lot, guys. It's in a segment of the market that I like. Very profitable company as well, increasing revenues 53% off the all-time highs. Very good value name. What did I do as well? We have a leap. We have a leap right down here, guys. Okay, so if you can't, my apologies. If you can't see it, right? So Estee Lauder, we bought the 140 calls for $48.40. Okay, we're already slightly up on them a bit. Don't know why this price is not showing correctly, but on the mobile app it does. We're already up, you know, nothing major, probably about $100, maybe $80, something like that. 140 calls for $48. So my break even is 140 plus 48, so 188, right? So keep that in mind. 188. All right. Where's 188? 188 is only right here, guys. It's only right here. We were there last week. That's my break even on a 1-year leap call. Okay. Why did I choose to do leaps? Because I get good leverage. That's the only reason, right? Instead of buying the shares now, 100 shares for $17,000, I got exposure to 100 shares for under $5,000. So it's like 3-to-1 leverage, right? That's the only reason why I took this Estee Lauder leap call. I'm giving myself a year to be correct on my prediction, and I'm not asking for much for break even. We're only asking for last week's prices. And if this thing runs like it should, guys, I mean, you can look at the analyst forecasts right here, right? All the forecasts, 190, 230, 270, everybody's bullish, right? So I'm just looking for that, and that's the logic behind this call. I've been talking about this company a while, so it should not be a surprise. What else do we have here? We also have some SE, right? So some AMDs. I mean, I think I didn't show you guys, right? The AMD 104s, but that's in my sweet spot, right? AMD 104s, comfortable if I get a sign down here. Very, very juicy area. SE, the 58s, you can see I wrote for 30 cents, which is 0.5%, right? 0.5% exactly would be if it was a 60 strike. But I got the 58s. You can look at SE on the chart here. Going to wrap the video up. Don't want to be too long on here. So where are the 58s? The 58s are all the way down here with this yellow line. You can see that this yellow line has been decent support in the past. We're kind of in a relative bottoming process. Has acted just this whole area, right, guys? Whole area has been acting as decent support. And we are towards the lower end of the chart, right? All the way back to pretty much COVID prices here. So I like the look of this chart, guys. Even if we do get a sign and it does push lower, potentially down into the 40s, that's really not too much of a loss in my opinion on this stock, right? So that's why I'm comfortable having writ that option right here, 2 contracts. And then obviously you have the Roblox 36.5 here for this same Friday. Only tech play that's new in the portfolio today. So where is 36.5? You'll see, guys, 36.5 is right here. This yellow line right here, you can see it's acted as decent support here on the weekly for a number of times. It's always an area where bulls like to contest, right? So I am basing my prediction off of that. You can see that it's actually below all of this chop zone, right? So hopefully that the bulls put up some decent support in this area right here, but if we somehow collapse through it, we'll really be extended to the downside at that point, and I will be expecting a bounce. These shares, I may actually, if we do bounce, I won't write covered calls on it right away if I get a sign. I'll be waiting for them to come back up to 39, 40 perhaps to write, because I really like this strike. If I do get a sign, you can see it's under this whole area. If I get a sign down here, guys, you would have only been able to pick that up back in May, and pretty much then, you know, all the way back in February, right? So decent position in my opinion, with some decent upside within this range. If we bounce, you know, I can be targeting $40, $45, something like that. So that's pretty much everything I wanted to show you guys here. If you liked it, I'd really appreciate if you liked the video, guys. Consider subscribing too. I really appreciate all of your engagement. You've been amazing. We just hit 200 subscribers, guys. I can't believe it. You guys are amazing. So hopefully you like the content. Hopefully you like the detailed breakdowns. I'm sorry for the long videos, but I just want to give you guys my whole thought process. I could do these in 15 minutes and just say, you know, Roblox, resistance up here, support down here, next chart, you know, but I think you want to know what to expect in the next few days when we're looking at daily candle formation, higher highs and higher lows, right? So I hope you enjoyed the video. I'll see you guys tomorrow after the close. Big day on earnings. And please be careful if you do choose to play earnings. Please be careful, okay? Because I've seen too many people get destroyed. Look what happened to me on Tesla, right? I tried, got a little bit. I wasn't even greedy. It was at 295 before earnings, right? I wrote the 270s and still got assigned. I wasn't even getting greedy on the premium, right? And I still got assigned, right? Thankfully, I was able to cap the loss and I have some decent risk mitigation strategies. But a lot of people could have lost their shirts writing higher than that and just basically sitting there wondering what to do, right? So just be very, very careful on earnings. I love you guys. We'll tune into the close. Let's see what happens tomorrow. Going to be a big week. Love you guys. Take care. Peace.